Good day, everyone. Welcome yet to another episode of Tuesday Money Talk, your financial literacy podcast where we help you build wealth over time. Today, we have something special in store for you. I'm sure when you heard that the US and Iran were fighting, you're probably wondering, that's their business. Well, what if I told you that a war happening over 6,000 kilometers away affects you, affects your next meal, affects fuel, affects your transport, even affects your next investment? Joining me today, we are going to be breaking all this down. We are going to be looking at how global conflict affects all of us as everyday Nigerians. As you already know, I'm never alone. I have the beautiful, sophisticated, and intelligent host with me, Taiwo Adegulube.
Welcome all to another beautiful session. Thank you, Yuji, for that. That was interesting, sophisticated. I like that.
She's very sophisticated. It doesn't get more sophisticated than our rich mommy here. So today we are going to be looking at how global conflicts around the world, most especially the war between US and Iran, affects all of us as everyday Nigerians. Joining us today, we have a very, very special guest, a man of great knowledge, great insights. He is an expert in the international market and global geopolitical conflicts. So he's Godwin Jr. Osaghale. I hope I didn't murder your name.
Yeah, you tried.
All right, thank you. So Godwin is an investment professional with years and years of experience in equity trading, financial market research, and investment analysis. He holds a degree from the University of Lagos in economics. And when it comes to investment analysis, no one in the industry knows better than Godwin. Welcome, Godwin.
Thank you very much, Judy. A lot of people know. But thank you very much for that.
And we also like to call him Prof.
Yeah, he's a professor.
We also like to call him Prof. Thank you so much, Yuji, and thank you so much, Godwin, for joining us. So like you just said in the beginning, I think it was just very on point. Like what's happening over 6,000 kilometers away affects you as an investor. And that's why we think at this our Money Talk, we try to break it down to layman terms. And so it's going to help you make informed decisions so you know how this affects you. And so maybe I'm just going to go straight to Godwin. Godwin, give us the preambles, how we started, what's going on now, and what we should be looking at as investors.
All right, so I'll start with how did the war start. So typically, the US with Israel mentioned that Iran had a nuclear weapon, and so they bombed Iran and they killed their supreme leader Khamenei. And Iran retaliated by also throwing missiles to US bases at the GCC countries, that's the Gulf Coastal countries, right? So that was literally what started the war. And US and Israel kept on bombing. And Iran knew that the only way to really get these people is by closing the Strait of Hormuz. Because it's a strait that actually, a channel that transports a lot of cargoes that transport oil. Literally, it's an oil center, right? And the closure in the Strait of Hormuz over time has always disrupted oil prices. And the disruption in oil prices, which is with a significant ingredient in the production process, disrupts literally world production. So that is literally what has happened in the Strait of, basically geopolitics concerning the US-Iran and how it affects us over here. And currently there is a ceasefire, though there was a ceasefire around April, right? And after the ceasefire, we saw oil prices move down from as high as 110 to pre-war levels of around 69, 70. But again, Donald Trump started something and bombed literally, and Iran retaliated and also closed the Strait of Hormuz, and that resurged price. However, there's a current ceasefire. So it's been hit me, I hit you. Then if I see that I can't really hit you, I close the strait again, or I set mines on the waters, and oil prices typically react almost immediately.
Okay,
it's an immediate reaction.
I thank you for breaking that down. So it's more like children fighting, I take your toy, give me back, I'm going to take it back, give me back. But here the toy is a very expensive toy.
Very expensive.
Because I mean,
I'm very sought after toy.
I'm very sought after toy because when you mention the Strait of Hormuz, right? I mean, that's the channel that typically, handles like, where oil, crude, and so you're blocking that. Yeah. You're creating artificial scarcity.
Yes.
And if you're creating artificial scarcity, correct me if I'm wrong, I know that our budget as a country was placed around 69, 70 for a barrel, right? Now, the good thing is that if artificial scarcity is happening and we are seeing prices go to 110 or 100, right? Is that not a good thing for us in Nigeria?
More income for us in Nigeria.
Yeah, it is. It is. So it basically increases our forex earnings.
Yeah.
Right? And an increase in our forex earnings simply means those monies is transferred to our reserves. And we've seen since the beginning of the war down to this point, our reserves have recorded highest levels.
Wow.
We've already met CBN's, based on what CBN said, that they've made their target for the year already at $51 billion. Right? So we've seen a significant, I won't call it good impact because there's always the good and the bad side,
So
but the good side has improved.
So I like the way Prof said the good side and the bad side.
Yeah.
So it's more like a double-edged sword.
Yeah, it is.
Because I remember, well, I'm going to talk like a retail investor. I started buying petrol. Pump price for petrol went up. Before now, when everything was stabilizing, I think petrol was around 700, 750, at max 800, per liter. All of a sudden, we just noticed that the prices, and then diesel too, also went like, so I know that must have had an impact on the common man, had an impact on inflation. And, even though our reserves were going up, it was more like a double-edged sword. I think maybe you should speak more on that.
So, like I've said already, the good side is an increase in oil prices increases your reserves because it's largely forex earnings, right? The bad side is an increase in oil prices simply means that you would be importing fuel because fuel is a derivative of crude oil. You'll be importing fuel at a high price. And thank God we have Dangote. Dangote is an in-house fuel producer. However, he also buys his oil at international prices. And if international prices goes up, simply means price of fuel will also go up. And if you remember, fuel was 800. I remember vividly because I bought at 800 before March. Let's say February 28, 27, I bought at 800. Then during March, fuel is an essential ingredient in everything we do.
Yeah.
You use it to transport your cars, you use it to fuel your gen, you use it to do literally everything, right? After that, I went to the station again. I was seeing fuel prices at 1.2. Right, that's a jump of more than 40%. That translates to cost of production for those that, for SMEs especially, that are powering, given our current electricity infrastructure deficit, right? So we power our facilities, we power our shops with fuel. Those that can afford diesel gen, power using the diesel gen. So if
transport those goods.
Yeah, so if the cost at that level has gone up, it just simply means you transfer these prices down to the final consumer. And also for the retailers, before you transport these goods to your shop, for maybe you go to the wholesalers you buy, you are as a retailer, you transport these commodities to your shop. These wholesalers and this distribution channel, price of fuel has gone up, so they will charge a higher money to distribute those same products you're distributing to you before. Say, assuming you're selling biscuits, right? They would increase their cost of transporting these goods or these biscuits to you. Now that increase in cost plus your own internal increase in cost simply means you have to pass it down to the final consumer to keep margins constant, else you run out of business. So that's how it has I just use the biscuit as an example.
Correct.
So extrapolate it out to other commodities in the economy, biscuits, tomatoes, oranges, down to the woman at man at Alaba selling electronics, the woman at Cheju Show selling clothing, the ones at my church selling fruits and all of that.
So it's a ripple effect.
Ripple effect. And that increases inflation.
Wow. So it's truly a double-edged. It was truly a double-edged sword.
Double-edged sword.
Interesting. Just to buttress what you're saying, even within that period, I noticed that some vendors, when they send you their invoice, after you discuss payment and everything, then you see below logistics, and then logistics is almost the same price of. I mean, it's huge compared to what was, what was before. Some vendors didn't bother about logistics. It wasn't a big deal. But now, by the time you add the logistics cost to, what the services that they are providing, I mean, the prices now become quite exorbitant. So really, that war really trickled down to the common man here in Nigeria?
Yes.
In terms of individual prices of things.
Yes.
Yes.
So,
okay.
Another question is, how does this, because we've seen how it affects commodities. We've seen how the war has caused increase in price of fuel, which has trickled down to, judging from the example you gave, as little as biscuits.
Yeah.
So how does this affect the exchange rate? Because we all know that in as much as the BRICS are trying to do what they are doing, majority of the world still buys crude in dollar. So if the war has caused a shortage of
Before you go there, usually remember our rule here. Please break down your acronyms. BRICS.
So BRICS simply means Brazil, Russia, Iran. BRICS simply means Brazil, Russia, India, China, and South Africa. So BRICS is the alliance of those 5 countries in order to create a new legal tender, a new money that will be used to buy goods and services within those partner countries, especially oil. So they are trying to remove the dollar out of the equation, as maybe not all of us know, but international trade is basically done, mainly done in dollar. If you have family members that go to China or family members that go to Dubai to buy goods and services, they buy dollar first. By the time they go to those countries, they then change that dollar to
the local currency.
To the local currency, because most international trade is being done in dollar. So BRICS is the alliance that is sort of like trying to remove the dollar hegemony or the dollar stranglehold, as some people put it, on international trade. So back to the question, we all know majority of the world still, despite the BRICS alliance, majority of the world still trades crude oil in dollar.
Yeah.
So how can this war affect, how does this war affect, because I'm sure it will affect the price of dollar somehow, if it's affecting biscuits in Nigeria.
Yeah, it does.
So how does it affect the price of dollar, and how does that now translate to exchange rate here in Nigeria?
Okay, yeah, it does, and I'll try to break it down as granular as possible, because it's hovering on 2 foundations, right? The demand side and the supply side. For the supply side, typically when oil prices rose, we saw the dollar index, right, also rise. And the reason is that when oil prices,
the dollar index?
So the dollar index is just basically an index that measures the performance of dollars against other currencies, right? So we also saw that the dollar gained strength in retrospect, just saying that the dollar gained strength. Now the reason for the dollar gaining strength is because when oil prices goes up, typically people or market participants expect that oil price is going to cause inflation. Inflation is going to cause increase in interest rates. And that increase in interest rates is for the Fed or the CBN governors to tackle or fight against the inflation that was caused by increase in oil. So increase in rates simply means that people would want to go and buy bonds or securities because it is higher yield. Now, and those security, the US Treasuries is one of the safest, if not the safest. So now it means that for you to be able to buy those securities, you have to what? Buy dollars. You have to own dollars. So it shrinks.
There's more demand for dollars.
There's more demand for dollars. So it shrinks the demand for dollars. That's basically, it shrinks the supply of dollars because everybody now wants that dollars.
Right.
That's on the supply side. On the demand side, typically, the demand side for dollars, because we're an import-based economy, even the fuel that we use internally have been imported. We import using dollars. So if the demand for petrol increases internally, we demand for dollars. So giving this way simply means that on the supply side, that shrink the supply of dollars. That is why we've seen that in the parallel market, dollars against naira has been around 1,390, 14. However, in the NAFEM rate is around 137 to 18. So, but typically what we monitor, we monitor both rates, the parallel rate, which is the parallel rate to the market rate, and the NAFEM rate. So many times when the dollar spikes up, you see it in the parallel market. You see it with traders, how they value the dollars, right? But the CBM NAFEM rate is giving us around 1,370 and 1.8. So we've seen that this whole escalation in the Middle East has caused the dollar to gain value. And if not that we are directly benefiting in terms of oil windfall that increases our foreign reserves.
So if Nigeria was not an oil producing state,
if we're not an oil producing state, we won't have enough reserve to be able to cushion the dollar effect. Because if you notice,
So the exchange would have been crazy.
the CBN has used the excess we've gotten from this whole oil windfall, right, to buffer our reserves in such a way that this day-to-day volatility in the dollar market can be curbed. So they intervene in the market. Anytime they see that dollar might spiral out of control, right, based on what is happening in the Middle East, they intervene because they have that buffer to be able to intervene.
Keep
the price stable. Because most of the time we want stability. Not only that we want the value of naira to go up against the dollar. Yes, it's good, but we want stability. Stability helps you plan. If you know the dollar is 1.3 or 1.4, you plan according to that. You adjust your pricing models and everything. So it just helps you plan. So and that's what the CBN, I think they've been able to do efficiently well, given that arsenal of good reserves.
So, okay.
Sorry, Yuji. So really, in every war, there are always winners or losers. The people that benefit from the war, there are people that, actually, well, I think at some point, maybe on the retail end or maybe coming down to yourself, you can make a decision to benefit rather than be a loser. Well, because from what you're saying now, the dollar has benefited really, because from the explanation which you broke down very easily, demand for dollar increased because interest rates gone up, and people are looking at going into bonds and bills that will give them better interest rates, right?
Exactly.
So the dollar has. So I can say it's safe to say the American government is also benefiting from this. Is strengthening, the US dollar. It's also safe to say, as a country, Nigeria, because we have, we're an oil producing country, we've also benefited on the other hand. And if not for the fact that we export crude, maybe the effect of this war will have been worse on us, because we'll have been able to cushion the effect.
Yes.
So now, I want to drill it down to a common man. As a common man, if I say, okay, I'm Taiwo, Prof, UG, I want to benefit from, I want to be on the winning side. I don't want to be a victim. I don't want to be a victim.
Be a victor.
I want to be a victor. I want to be a victor. What do I do?
So there are different things you could do, but to dilute it, you have to be invested in the market. Now, being invested in the market simply means that we expect typically when oil prices goes up, it trickles down to inflation.
Yeah.
Things go, the value of a currency is depleted. And you shouldn't be holding a depleted value, because it simply means that you buy less. If you want to consume now, you buy less of what you could have been able to buy before. So it's best you invest. The investing just simply helps save your money from deteriorating.
So it cushions the effect.
Cushions the effect.
Correct.
So remember that increase in oil causes increase in inflation.
Correct.
And increase in inflation would need to be curtailed by increase in rates.
Correct.
Meaning that rates and yields will be high. And investing in a high yield environment is good, because we know that at some point these things draw down.
Correct.
The yield will correct itself, right, to go down later on. So why not invest now so that you can maybe lock up a 17%, 18% yield, so that by the time the whole war subsides, and when yields are correcting and going down, you've already locked up a higher yield.
Beautiful. So from what you said now, if you can get these higher yields now, like you said, it's not going to be high yields forever, because the war is not going to last forever.
Exactly.
People should be looking at long term.
Yes.
Like at least, when we say long term, it's still short term. At least 6 to 1 month, 6 months to 1 year.
Yeah.
So people that are looking in funds for 30 days, 60 days, 90 days, should be considering going on a longer, at least locking in those rates for those yields for like a year. People should also consider bonds. Yes. Bonds are long-term instruments, and then because the coupon rate will also be juicy. Yes. I'm saying, okay, let me just lock in and be getting my cash flow and be getting my. So those are outlets that people should be looking at now at this time.
Exactly.
Beautiful.
So, in addition to what she said, I want to drill it down to the common man, the everyday person, the 9-to-5er. So what other, apart from the bonds and short-term investments she mentioned, so what other investments usually do well in times like this, in times of global uncertainty? What other investments usually do well? What other investments can a regular 9-to-5er, say, okay, someone's watching this podcast and he has decided, okay, I'm going to be a victor today. I'm not going to be a victim. I want to play this in my favor.
Correct.
So what other investment should somebody be looking at going into?
Okay, so it depends on the particular person's investment goals.
Okay.
Right. So for a typical 9-to-5er, you have steady cash flow.
Yeah.
You have steady cash flow. So it's best to invest in, if you have knowledge about the markets, right, you could, go in, invest in, again, like I told you, the direct beneficiary of this war are those that are investing in the fixed income space because you get higher yields.
Correct.
Right. You can also go into the stock market, but many people don't have knowledge about that. So
sorry to cut you short there. I like the way you mentioned the stock market. So now, because you mentioned yields are, going to be, because as a result of the war, interest rates are going up. Yeah. This also means that for SMEs and for large corporates, the cost of borrowing money is also going to be on the high side, right? Yeah. So if it means that the cost of borrowing money is going to be on the high side, if everybody is going into capital market now, returns might be a bit more juicy than it could have been when yields are low. Yeah. Does that really does it tally? I was just thinking that off the back of my head.
Yes. So they if you go into the market now, you get money.
And that's because, so before now, prior to now, when yields are, if I'm an SME, I'm just thinking, if I'm running a small scale business and yields are, interest rates is reasonable. It's cheaper for me to borrow money.
Yes.
When I'm borrowing money now, I'm not going to be looking at borrowing money at some ridiculous yields because I can raise capital at a cheaper, at a cheaper rate. Yes, yeah. But now, when the yields are high, I'm raising, so because it's a high yield environment, as an SME, I'm willing to pay more for whatever capital I'm raising from anybody, maybe from private investors or from the general public or for friends and family. I have to match what is obtainable within the environment. So does that also tally for people that are looking at going into the capital market and saying, oh, okay, I'll probably make more returns now if I, put in funds, buy some local equities, buy some stocks, buy some. Does that also?
Yes, it does. So I would say that for anybody, this is the best time to be a saver than a borrower.
Beautiful. So for everybody that is always going to, let me not call names, all those loan sharks, and say, I need a quick 500,000, or I need a quick, hey, please, this is the time to think well about that. This is not the time to be doing that, really. This is the time to be a saver. So whatever funds that you don't need, really, that you can control, right? If you've always been borrowing funds from one app, sharp, just know that they are making a lot of money off you. This is the time to actually save more. Discipline yourself and save more. This is not the time for borrowing, right?
Yeah, excellent.
Yeah. Thank you so much, Prof. I think this has been very insightful. Prof, you've broken it down to the barest, I think, to very simple terms of knowing how I, as Taiwo, can benefit, even though there's a war going on, like how many miles away from me. And it's also very important to know that as investors, you need to be aware of what's going on around you. Yes. It affects us. Who would have thought that one day the US and Israel and Iran were going to do something, some big fight was going to happen, and it will affect the tomato seller in the Nigerian market. It will affect the price of tomatoes in the Nigerian market. So it's very important that you keep joining us here, to understand more of what's going on around you, so it can help you make informed decisions. Now, to recap, what we've learned from here, if you want to be a victor and not a victim. 1, this is the best time to save. This is the best time to start looking at long-tenured investments. At least for short-term investments, think of at least 1 year. This is the best time to start looking at bonds, that will give you very juicy coupons at, on a biannual basis. So at least you have cash flow. This is also a good time to be looking at the capital market. But like he said, you also need to understand. You can't have the herdsman mentality. You need to talk to your financial advisor when you're trying to make investment decisions in the capital market. Any other thing to add, Yuji?
So this is the best time to be a saver and not a borrower. So a practical question, Prof. If somebody has 500K today, what should the person do with it?
500K. Again, I told you to be best time to be a saver and not a borrower. First is to save it. Now, how do you save it? There are different channels in saving this money. So you could save it by buying savings bonds. You could save it by buying mutual funds. You could save it by buying any form of investment that is going to give you coupon or returns above current inflation rates. The current inflation rate is around 15.91. So typically investment vehicles that will give you 16-17% are the best way, because you'll be beating inflation.
Yeah, correct.
So your value of your currency is not deteriorating because you are getting something more to compensate you for saving. But if you are spending, simply means that what you could buy, what 500k could buy before, you can't even afford it now. So why not just save the money so that by tomorrow next year, you would have gotten extra to be able to now afford whatever you can afford later on.
So thank you very much for that. So
sorry, I just want to chip something in. Thank you so much for that. So he said save, and then he mentioned outlets for investments that will help you make returns. So it's important that first of all, don't spend that money, save it, then you invest it. Now I'm sure you're thinking, how do you execute? I mean, you can also always reach out to us on our different platforms, and then we can hold your hand through different investment processes that will help you make an informed decision. He mentioned mutual funds. I mean, with mutual funds, it also cushions the effect of inflation. But like he said, 15.91, that's what inflation is now. So most outlets can even give you at least, 1% or 2% above the inflationary rate. So please save, invest, and earn rather than spend. Back to you.
all right, thank you for that. So moving on, we are moving on to my favorite part of the segment called the rapid fire segment. So we'll be asking you questions. You have 60 seconds to answer all the questions. So each answer must not be more than a sentence.
Okay.
Are you ready?
Yeah.
Are you ready? All right. So what should Nigerians do right now?
Nigerians should not panic.
Okay. Should people rush to buy dollars?
No.
Should people be worried about another spike in inflation?
There could be a spike, but not at worrying levels.
Okay. What is one financial mistake Nigerians should avoid making this period?
Borrowing from loan sharks.
That.
So one smart financial decision they should make this week.
Invest today.
I love
Thank
that.
you.
I love that. So global conflicts may be beyond our control, but what you do with your money is definitely within your control. So stay informed, stay invested, and stay tuned to Tuesday Money Talk.